CME halt of the market is something that you never care 99.9% of the time. But in this period with Trump and the insanity of the tariffs, of the news, the market is moving like it's a penny stock. Nasdaq is moving 7%, 10% up, and 7-10% down like it's nothing, like it's butter. But it's very important to understand what is CME halt and how to avoid the problems with your future prop firms. Especially, don't get liquidated by just not understanding these little things that can be a really big things on your trading. I want to show you as well how to evaluate when there is a possible CME halt, and as well the difference between Topstep and Epix regarding that. If you're a Topstep user or if you're Epix users, the difference between the prop firms, how they treat you in these cases, and as well I'm gonna try to teach you the best to avoid any problems during this period. Let's get it, guys. First of all, let's move to what is CME halt. CME halt, guys, is when the market is moving too much on a day on a panic sell, and the people from CME, the exchange, they're trying to protect the market, they're trying to protect people from panic sell, and they block the market for a few minutes. And then they're gonna reopen it, allow again trading, and see how the market evolves, and they can halt it again. Usually it's a 7% move from the settlement price to the actual price. So if the market already lost 7% from the settlement price, and I'm gonna give you an example of today that the market almost halted, but I will tell you as well why it did not. The fact is that the first time is gonna be at 7%. If the market is halted, then when it's gonna reopen, it will allow a maximum 13%, and if it reaches that value, then it will be halted up to 20%, and 20% the market is closed. It won't reopen for the rest of the day and won't allow any more trading. It's very difficult. It's almost impossible that we get to the second level. The 7% is already insane. So the most important things right now is protect yourself from the 7%, and I'm going to show you the next one. First of all, I want to show you the difference between Topstep and Epix. Well, let's start with Topstep because it's the one a little bit more complicated, because Topstep has a limitation. It does not allow you to trade if you're too close to the halt. What does it mean? Topstep give you a 2% from the halt possibility to not trade. You cannot trade close the 2% to the halt. So you can see here from the picture, we have the settlement price, so the price where the market settled the previous days and is gonna reopen close to it. From there, you can the CME evaluate the move from the previous day to the next one. So at the settlement price, if the market is selling off and is reaching 5% to 5% lower on the price movement, Topstep does not allow you to trade. It's gonna halt you to trade, and this is the way from the prop firm to protect the prop firm itself from gamble addict, because if you're trading very close to the halt, probably you're risking too much, and as well to protect the traders themselves. So in this case, Topstep won't allow you to take any trading action on the 2% very close to the halt. So guys, be careful if you're Topstep users. Do not trade close to the 5%. Stay away from it. Trade around the 3%. And if you see you're getting close to the 5%, stop trading, because you most probably the prop firm will halt and will close your position. The second firm, that is the one that I'm right now connecting, is Epix. Epix, the difference with Topstep, it does not have a limitation. What Epix says is that you can trade during all the 7% limitation, the 7% drawdown that CME allows until the halt gets activated. The only thing is that it's your trading responsibility. If you're in a position, the market halts, and then boom, it reopens 100 points higher, and you lost your account, it's your fault. It's not Apex's fault, and it's understandable. If the market halts and you decide, let me get up in a position right away, the first second of the market, the first milliseconds, let me put in, and the market, the first milliseconds have insane spreads, and it skyrocket to the sky. On the first milliseconds, you can have a different 30, 40, 50 point spread, and you have a few mini contracts, you're dead. Your account is gone. is liquidated. So Apex is telling you, look, we're not going to give you limitation, but trade with responsibility. Lower your size, have correct risk management, and everything is fine. But if you trade and exaggerate on your risk, and then you blow your account because of too much risk or during a halt, and remember, a halt is something insane. It's something insane. It happens once every freaking 10 years. So Apex in this case says, just be careful. Do not put your risk on a day like this because it's very rare. So to show you the difference, let's move to NASDAQ right now. We have a CME website, and how you can go is, for example, right now I search for NASDAQ and contract NQM5 for today, go for settlement price, and the settlement price for today is 19,288.75. So let's go to the price action of today. That was insane, guys. We were so close to get halted, and I will tell you why it did not happen. So let's find our value right now first. The 19,000, how much was it? 19,288.75. I'm gonna put it 98,288.75. Perfect, is here. And from here, value here, let's put it a different color. CME says, if the market drops 7% from this price, the market will be closed. But why today did not happen? So let's see, let's put myself here, trying to get as much as I can precise, but it was not gonna be super precise. So forgive me on that. Oops. So let's see, from here to the bottom, look at that, we have 7.01%. So we got 7.1% low from the settlement price to the actual price of the value we reached this morning. But the market did not halt. And why the market did not halt is because CME allows a 2 minutes time period since the market drops the 7% to to see where the market evolves. And if it decides and in the next 2 minutes it drops 2 more percent, it's totally fine. CME won't halt, and it will only halt after 2 minutes since the break of the 7%, and it keeps below the 7%, the market will be halted. In this case, as you can see, it reached 7%, right? But it was a 1 minute candle, you can see here. So it dipped, went below 7%, and it bounced right away. And that's why many people say today, why the market did not halt? It's because CME allows a 2 minutes range from the moment it breaks 7% to the idea of blocking the market is a 2 minutes range time. So guys, that's it for today. That's mostly it. I want to show you how it works, CME, how you have to be careful around it, and how to be careful around the 7%. Just don't overtrade around that much. Just don't over leverage. Don't try to get the big gain of the day, guys. Most of the people in these days are losing money. Only a small percentage are making bank by catching these moves. The others are losing money. The majority are losing money. So don't get caught by fake influencers showing you only big money. There are people losing. And I'm the one that shows lives every day, shows correct risk management, shows that losing is normal, and I do it every day from the last 11 months live traded. And I've been trading for 5 years almost right now. Guys, you're welcome to come and trade with me at 9.5 New York session. For the rest, wish you the best. Be careful during this market. And if you want to purchase the Apex evaluation accounts, my code Hamza is the best code you can use online, and it will give you always the best discount available. Guys, thank you so much, and see you next time.